Okay, this is going to be a homework walkthrough for chapter 8-4. So question 1, we've got Gidge Harbor Boating is the wholesale distributor of a small recreational catamaran sailboat. Management has prepared the following summary data to use in its annual budgeting process. And it gives me budgeted unit sales, selling price per unit, cost per unit, variable selling and administrative expense per unit, and then the fixed selling and administrative expense per year, interest expense for the year. And they want us to prepare the company's budgeted income statement for the year. Okay, so the first thing I'm going to do is I'm just going to put all these numbers where I can reference them for my document. So 840 is my sales units. So that's not dollars, that's units. 2140 is my unit price. That's expensive. Cost of goods sold is 1700. Variable selling expense per unit is 85. Fixed is 225,000. And then my interest expense for the year is 30,000. Okay, so the first thing when you're doing a budgeted income statement, it's always sales minus cost of goods sold equals gross margin minus selling and administrative expense equals net operating income minus interest expense equals net income. And so I just start plugging numbers in. Now, they gave me units and they gave me the sales price per unit. And so this number is going to be equal to the number of units times the sales price per unit. See that? Okay. And then cost of goods sold is going to be the number of units times the cost of goods sold per unit. And then I will take my sales minus cost of goods sold. There's my gross margin. Okay, selling and administrative expense. This one is a little tricky because there is a variable part and a fixed part. So you need to add those together. So I am going to go equals and I'm going to open parentheses, variable or the units times the variable per unit, close parentheses, plus the fixed selling and administrative. So it's the units times the per unit plus the fixed. And that gives me my selling and administrative expense total. Okay, so then I'm going to take my gross margin minus my selling and administrative expense. And that gives me my net operating income of 73,200. And now we need to put in the interest expense. So that just equals, because that's for the year, it's just the number they gave me. And then I take equals my net operating income minus my interest expense gives me my net income of 43,200. Okay, so that was fairly simple, just filling things in and making sure that you do the variable and the fixed for the selling and administrative expense. All right, question 2. The management of Mecca Copy, a photocopying center located on University Avenue, has compiled the following data to use in preparing its budgeted balance sheet for next year. So they're giving me ending balances. We don't know what cash is. Then I have accounts receivable, supplies, inventory, equipment, accumulated depreciation, which remember that's a contra asset account, accounts payable, common stock, and then we don't know what retained earnings ending balance is. The beginning balance of retained earnings was 34,000. Okay. Net income is budgeted to be 18,700 and dividends are budgeted to be 5,200. So those three numbers are going to be important to help me figure out ending retained earnings. So if you'll remember on a balance sheet, you always start with cash and then accounts receivable. And for this company, supplies inventory. And then under plant and equipment, you have equipment and then accumulated depreciation. And we're going to want to remember when we put this number in, the amounts to be deducted should be indicated by a minus sign. So when I put this number in here, I need to make sure it's a minus sign. And then our current liabilities are accounts payable. Our stockholders' equity is common stock and retained earnings. Okay, so just real quick before we even start, I'm going to figure out what retained earnings is. And so back up here, they told me my beginning balance is 34,000 and my net income is 18,700. And then my dividends are 5,200. And so the way you figure out ending retained earnings is you take beginning plus net income minus dividends. So I'm going to take beginning plus net income minus dividends. And so my ending retained earnings balance is 47,500. I'm just going to reference that there. Okay. So that tells me that. So we don't know cash, but we do know accounts receivable is 8,700. And again, I'm just pulling the numbers straight from up here. Supplies inventory is 5,100. Equipment, 37,000. And then accumulated depreciation is 15,000. But remember, I want to put that in as a negative 15,000 so that it is subtracted from my equipment because it's a contra account. Okay. Accounts payable. That was 2,400. And then common stock, 5,000. Okay. Common stock is 5,000. Okay. Now, because I already figured out retained earnings, I now have my total, and I'll just explain really quick. So for liabilities and stockholders' equity, it's accounts payable, and then common stock and retained earnings are added together to get the 52,500, and then my accounts payable plus the total stockholders' equity equals my total liabilities and stockholders' equity. And now, if you'll remember, on a balance sheet, whoops, total liabilities and stockholders' equity equals total assets, which right now you can see my balances are not the same. And when I do this right, these two numbers will be the same. But we can use this number to help us figure out what the beginning cash is. And so we take the equals the total liabilities and stockholders' equity, and then we minus total current assets and minus plant and equipment net. And when we do, whoops, what did I do wrong? Okay, something wrong. Oh, I didn't like that. All right, so we won't do that. Let me see, how did I do that? Oh, I see. We gotta move our way around Excel to get this done. Okay, so we're gonna equals the 54,900, and then I will minus accounts receivable, minus supplies inventory, minus plant and equipment net, and that should equal my beginning cash balance. And now you notice my total assets and my total liabilities and stockholders' equity balance. So my balance sheet is in balance. Okay,